Starting a small business or expanding an existing one often requires additional funding, and securing a loan can be a daunting task. Many entrepreneurs struggle with understanding what is needed to successfully apply for a small business loan. In this video, we are sharing 10 expert advices before applying for a small business loan. 1. Understand your business needs. Before applying for a loan, it is crucial to have a clear understanding of why you need the funds. Are you looking to expand your operations, purchase new equipment, or improve your cash flow? Defining your business needs helps you determine the loan amount and the type of loan that best suits your requirements. 2. Check your credit score. A high credit score increases your chances of getting approved and securing favorable terms. Before applying, obtain a copy of your credit report and review it for any inaccuracies or issues that need resolving. If your score is low, take steps to improve it, such as paying down debts and ensuring timely payments on all accounts. 3. Research different lenders. Banks, credit unions, online lenders, and community-based lenders each have different loan products, interest rates, and qualification criteria. Compare these factors to find a lender that aligns with your business needs and financial situation. 4. Prepare a solid business plan. A well-prepared business plan is critical when applying for a loan. It demonstrates to lenders that you have a clear strategy for using the funds and repaying the loan. Your business plan should include an executive summary, market analysis and organizational structure, product or service line, marketing strategies, and financial projections. 5. Gather financial documents. These typically include your business and personal tax returns, bank statements, income statements, and balance sheets. 6. Know the types of loans available. There are several types of small business loans available, including term loans, SBA loans, lines of credit, and equipment financing. Each type has a different term, interest rates, and uses. Understanding these options helps you choose the loan that best fits your business needs and financial situation. 7. Understand the terms and conditions. Before signing any loan agreement, carefully review the terms and conditions. Understand the interest rate, repayment schedule, fees, and penalties associated with the loan. This knowledge helps you avoid unexpected costs and ensures that you are fully aware of your obligations. 8. Evaluate your repayment ability. Consider your business's current and projected cash flow to ensure that you can meet the repayment terms without jeopardizing your operations. Overestimating your repayment ability can lead to financial strain and potential default, so be conservative in your estimates and plan accordingly. 9. Consider collateral requirements. Many loans require collateral, which is an asset that the lender can seize if you default on the loan. Common forms of collateral include real estate, equipment, and inventory. Understand what assets you can use as collateral and the potential risks involved. And number 10, seek professional advice. Consider consulting with a financial advisor, accountant, or business mentor.